Hi, everyone, and welcome to the James CO channel. Today we are here with Daniel Roccanti. Hi, Daniel. How are you?
Hi, Faye. It's good to be back.
Good. So today's episode is real estate strategy in 2026, where smart investors are winning. Because I think a lot of people talk about the failures. Sometimes it's nice to focus on the successes that people are having. And some of your advice, I think, would be great too. So the first question is, what's the biggest financial shift real estate owners are dealing with right now? And why are so many unprepared?
When we think about this market you were mentioning before, of like, why does it feel like real estate is so tough right now? I think it has more to do with where real estate was a few years ago compared to where it is now. Before, it's just made this shift where it moved from kind of this growth appreciation market to more of a stable cash flow market. And so back then, you could do whatever you wanted, just buy real estate and it's going to go up. Okay. You didn't even have to buy a cash flowing deal. All right. And so for a long time, it just felt like anyone going into real estate didn't need to be good, didn't need to be efficient, and they still won. Okay. Today's market takes actual skill. The math has changed. Everything's gone up, expenses, debt, and everything. So you really got to focus on cash flow. So when I'm talking to my clients, I'm like, have you run the numbers? Does this cash flow? Does it cash flow if the market gets worse? I know it's hard to believe this sometimes when you're like, hey, the market can't get worse. It absolutely can get worse. Just look at history, talk to a few people, 10, 15 years ago, and they'll tell you how it got a lot worse. It can get worse. I don't know if it actually will, but you need to map that out in your scenario. It go back from the method of where, hey, my property that I buy is going to double in value in 5 years to a more sustainable appreciation amount, but really this is a cash flowing asset and it needs to be supported by its cash flow.
Absolutely. So are you seeing more investors play offense? Let me rewind. Are you seeing more investors play offense or defense in today's market? And what should they be doing instead? What do you think?
So I would say it's definitely a more defensive market, and there is lots of investors out there playing pure defense right now. But really, what you need to be doing is selective offense. Okay, if you're into real estate, you should never ever 100% not buy. Okay, now you might look and not buy. That's absolutely fine, but you should always be looking and running the numbers. Okay, because the market will kind of tell you before it turns. So even if you're not really looking, by running the numbers, if you're out of the game altogether, you're going to figure it out too late. The people that are in the market, still doing their job, still looking at deals, are going to figure it out before you, and they're going to get the better deals because of it. So you want to be smart investor here, and you want to play selective offense. Keep looking at deals, keep running the numbers. Just don't pull the trigger if the numbers don't make sense here. You need to justify that it's still a good purchase. All right. What happens if rent gets slower? Things like that. Expenses keep going up. Make sure it still cash flows and you're just not buying it. You don't have what I call the investor itch. Anyone investing in real estate, they get that itch if they just haven't bought in a while, and they'll make a bad decision and buy, or they get really scared and then they won't buy anything ever again because they had one bad deal that went the wrong way. So neither one of those is too extreme. You always want to be in. It's just probably a little bit more defensive right now, but keep that offense selective.
Yeah, and it made me think of like, okay, let's say 10 years, 15 years ago, especially in South Florida, real estate was like, oh, but you have extra cash, let's just go buy. You're gonna triple whatever you invest. And I think sometimes now, like you said previously, like, it's not necessarily like that anymore. You have to be smart, you have to know, and it's not as like, Wild West fun, to make those moves, but having someone like you advise them on the right things to do, would show profit.
Absolutely. And a good investor, they'll run their own numbers, but a lot of them will still run it by me. What do you think? What am I missing here? And that's a good advising opportunity to give my input on the deal as well.
Absolutely. So what does profit optimization actually look like for real estate owners beyond just cutting costs?
Right. So I think when people think profits, they're just like, let's cut the costs, let's cut the costs. And you're really profit driven. I mean, this is business. Everyone's profit driven. The whole point is to make profit. Okay. If we don't, we're not, why are we doing it? But when your sole focus is on profit and you're not thinking long term, you can actually hurt your profits in the long term. So when you're thinking about profit optimization here, you really want to understand, all right, am I improving the quality? Okay. Am I doing everything? Am I thinking about the rents? Are the rents at actual market? All right. Can I up my rents? If I improve my property, okay, does that actually make it a more valuable property? So CapEx is an expense, actually might make my investment and my profitability better in the long term by investing in my properties. What I see with real estate people do sometimes is they buy a nice property, but they're just sucking it dry of every profit and they're not reinvesting back into it. And all that delayed maintenance, deferred maintenance, and then it looks outdated. And then like it can't even come close to getting the rents. And then it gets to be just such this big piece where they have to put a crazy amount of money back into it, or they just have to sell it at a discount price. So you really want to make sure when you're doing profit optimization here is you're like, hey, there's rents, there's expenses. How am I keeping my property up to date so that people wanting to rent my property and things like that? Um, I'm still one of the top ones that they're looking at, and I'm not just looking like a 1970s apartment complex that's outdated. You need to make sure that you're keeping it up to date because in the long run, you'll actually make more profits by even maybe sometimes spending a little bit more money year to year.
Absolutely. How important is cash flow visibility in today's market? And what are people getting, like, how are they getting it wrong?
I I said this kind of like in the first question. I think we really need to go back to cash flow. All right. It's kind of everything right now. All right. We really got a way for it in the real estate community of just buying properties because they appreciate. All right. And today's market, the numbers need to make sense. All right. And don't make mistake of just because it makes numbers on accounting or your books doesn't actually cash flow. It needs to cash flow and it needs to do that first before everything else. So you really need to be going down, doing what your net operating income is, going in there and seeing the visibility of your company. We've talked about this before, 13 weeks cash flows, 12-month rolling cash flows. You really need to be understanding, all right, what happens if the market turns? Is my still going to be cash flowing no matter what I'm seeing? If you're just going out there blindly and hoping for the best, you're going to actually get what you're looking for, which is something unexpected that could ruin that property and ruin your investment. You just need to be making sure property cash flows in the current and that it will continue to cash flow. And if something changes, you're able to catch it before everyone else does.
Absolutely. And this next question, I actually think you could write a whole blog series on because I think this is like on everyone's mind. But what role does timing play right now? Are investors moving too fast, too slow, or just guessing?
Yeah, there's not really a lot of like it's moving too fast or it's moving too slow. I mean, that's different for everybody here. It just more comes down to that, like, you know, you really need to understand, you need to get out in front of everything. Okay. What people do here is say, all right, I have debt that's coming up. All right, well, they don't think about it until the debt is coming up right then. Like you need to be out in front of that. You need 6 months, sometimes even 12 months in today's economy of getting there, talking to your lenders. If you start talking to them 30, 60 days before it becomes due, it's too late. Okay. You've limited your options. So really when it's coming to investors, it's not that you're too fast, too slow. It's that usually you don't think about it until it's too late. Okay. And so you need to really understand that your timing just needs to always be, all right, that's coming up. 6 months from now, I need to be reaching out to my lenders. Okay. Tax planning, all right. It always seems to be a little too late when you want to do it. It needs to be well out in front of you when we're talking about this. Renovations, we talked about this before. Should I be renovating my? You need to be thinking about that before the renovations will ever need to happen, what the cost will be, coming back to taxes here. All right, maybe I'm looking at selling. Do I want to do a 1031 exchange? Are you thinking about it when you're selling it, or are you thinking it before the property's even selling? What are my options that I have to do with this property, and does it make the right decision for me? So you just want to always make sure that you're proactive, planning, and so that you're not running into the stuff too late. You're really limiting your options here if you do.
Absolutely. What's one financial move smart real estate operators are making right now that others aren't?
So in today's market, we talked about it being defensive and a lot of things. So a lot of investors are out on the sideline right now. Okay. And that's not necessarily a bad thing, but if you're on the sideline, you have time. Rewrite your entire portfolio. Okay. So re-underwrite it. Like if you were to buy, would you buy this portfolio today? If you had a clean slate, would you buy it? Reanalyze your whole portfolio. You'll probably be surprised. There might be some, there might not be. So you're basically going back today and saying, all of my properties, would I buy this today if in my current situation? Okay. What's my real return? What's my real cash flow on this? What happens if the market does get worse? What happens if my debt and I have to refinance? Is it still going to cash flow then? So really what you want to do is reassess your current situation, not in the market when you originally purchased it, but what about today's market? To really understand is like, is this my most efficient portfolio? Sometimes if you have a terrible asset, it's not cash flowing, now you have at least an idea like, all right, should I get rid of it, find a new one? Is there ways I can improve it? But if you're just sitting on the sideline waiting for the market to be getting better and doing nothing, then you're really just doing what everyone else is doing, which is just, hey, market, please save me because I'm not bringing anything extra to this. Real estate's great because of the control you have. You're not, this isn't buying a stock. I don't buy a stock in Apple and then good luck. I hope they do well and my stock goes up and I get my dividend. This is your controlling asset. You control it. The market does have a play here, but your control matters so much more. And you can make this a great investment or an okay investment or even a bad investment.
Oh, absolutely. Okay, so the last question is, if you were advising a real estate owner today, which you do, what's one thing that you would tell them to focus on for the next 12 months?
I would say let's focus on like your financial visibility. This all kind of has the same reoccurring theme here, but really go back and look at each asset here. Look at the cash flow, look at the debt, look at your capex, look at your taxes. Look at what your break even occupancy is. What is your upcoming risks? Okay. I really want to understand each property and financially how well they're doing. What's the financial health of each asset? Okay. Then I want to know what my options are. All right. And you always need to know what your options or your choices are before you ever need them. Okay. So that could be refinancing, that could be restructuring, that could be selling, that could be bringing in new investors, that could be doing a 1031 exchange, things like that. That could even be, hey, do I need to adjust my distributions? You really need to get out in front of that. I mean, if you have investors and things like that, or even if it's just a property your own, usually you're expecting a certain amount of money every year. Well, maybe we need to actually pull back on that and reinvest into the property so that we can have those distributions more. We might have to put some stuff on pause, things like that. You really want to understand because if you don't know what your options are, this is when people get in trouble because then an incident happens and you're out of options. And when you're out of options, then you're basically doing whatever the market gives you, or sometimes unfortunately going bankrupt or something like that, or just losing the trust in your investors or other people in the real estate industry. You really want to make sure that, all right, where's the health of my properties? What are the options I have if something comes up so that I can be able to deal with any situation that the market throws at me?
Absolutely. I think sometimes it can feel overwhelming, especially, you see all these homes going up in price and you're like, oh, an investor, you're like, oh, this is great. And then it's like, no, I can't afford any of this. But, I think it's great to have you, Daniel, as like an advisor. And I think if anyone's in the process right now of looking to invest or needs solid advice to reach out to Daniel, his LinkedIn, Daniel Roccanti and James Morco. So, reach out to Daniel if you need him. He's a great guy. Fun to talk to.
Okay, it was good. It was a pleasure again.
Yeah, talk to you soon. Thanks.